Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at Lightning Emotors. They reported earnings, so I wanted to give you my thoughts as well as my stock price prediction for the end of 2021 and 2022. So let's jump in. All right, guys, before we get started today, subscribe to the channel for me. Hit the little bell all so you stay notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. If you want to be part of the Day One squad, come over and check it out. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along. Really anything. Anytime I'm mapping a chart or I've got a swing trade or a crypto trade or, anything that can grow our portfolios, I keep you guys updated. So if that's something you're interested in, if you want to join the family, be part of the Day One squad, come on over. I would love to have you. Current patrons, I love you guys. Thank you so much for your support. But let's get started, guys. So Lightning Emotors, I haven't given you an update in a little while. I wanted to kind of go over the earnings report with you, give you my thoughts on where I see it going. The earnings report didn't look too bad, considering all of the things that have been happening with the chip shortage and the pandemic and just everything. They did lower their guidance just a little bit, but I don't think it's too much to be alarmed with. I really think Lightning Emotors is at a point of inflection where they can really rapidly increase their revenue if they execute on a few very, very crucial tasks. Now, I also think that the stock has been doing pretty well, considered that it got annihilated over the course of the last few weeks, and it actually has started to get back up and has been holding decent levels around the $8 mark, not getting pushed all the way down to the $6 mark. So let's look at the earnings first. So as you guys can see here, Lightning Emotors reports earnings. That was back on May 17th. Now, as far as the highlights goes, despite supply chain headwinds, Lightning Systems reported Q1 sales of 31 purpose-built commercial electric zero-emission vehicles. Guys, they did 72 total in the full year 2020. They just did 31 in the Q1 of 2021. So not too bad there. Nice growth. Now, first quarter 2021 revenue was $4.6 million. Up from first quarter 2020 where it was only $700K. So, obviously a big jump there. When you've got a low baseline, the percentages don't matter that much, but again, nonetheless, they're growing. This is in line with the quarterly growth required to meet the 2021 revenue guidance below. The company has incurred a loss from operations of $5.3 million during the quarter. Guys, when I said earlier with the inflection point, they're in a position to drastically increase revenue, but we aren't going to see positive EBITDA to, I think, a minimum of 2023, and I don't think we're going to see positive free cash flow until a minimum of 2025. So you've obviously got risks there. It's not like in the next year, they're going to be cranking out huge gross margins and bottom line. It's going to take some time, but coupled with all of the other things that are going on in the company, as long as they can continue to increase the top end, I think they'll do just fine. Now, vehicle sales for the quarter included electric shuttle buses, delivery vehicles, refrigerated trucks, ambulances, and RVs across Class 3, Class 4, and Class 5, shipped to customers, including the DHL deal. We covered that. Fluid truck, we covered that as well. ABC companies, Meals on Wheels, and others. All with the 1Hertz telematics providing big data information on the commercial electric vehicles, range, payload, efficiency, and reliability. So hopefully that telematics system can provide them, with enough data, and they've got enough cash on hand from the merger, that they can execute on becoming more efficient and effective, just ultimately improving their product. Now, this is some good news. Obviously, we want to see a big backlog. The backlog at the end of the quarter was $169 million and sales pipeline of $807 million, respectively. Guys, so a backlog is pretty different than a pipeline. Obviously, I would rather have a big backlog than a sales pipeline, but nonetheless, you've got to have both. In a sales process, style model, you've got to have a good pipeline. you got to look at it like a funnel, right? They put deals in, or they put a pipeline is a proposal that they have out in the market. So say, I'm talking to you about a electric vehicle, you're interested. So I said, well, I'll send you a proposal. You can look it over. We talk cost. I quote you out for 10 electric vehicles or whatever. That is a pipeline, in the pipeline. So say I quote you for 50 million or whatever it is. I've got 50 million in the pipe because I sent you a proposal. A backlog is like contracts in the hand. Like I pitched you, you said you wanted it. I sent you over the agreement. You sent it back. We are counting on that order. It doesn't necessarily have to be legally binding. Like you can still cancel, but a backlog is further than just a proposal. It's an agreement in hand ready to be executed. Now, a few words from Tim Reeser, the CEO. Chief Executive Officer of Lightning Emotors said, "We are delivering purpose-built commercial zero-emission vehicles today from a factory that is already in production, continuing to add to our 2 years of customers on-the-road experience, validation, and data. Q1 2021 continued the fast sales and delivery growth that stated in 2020. As our production capacity, supply chain diversification, automation implementation, and marketing efforts increased, so did our abilities to execute deliveries at a record pace. As a result, Lightning Emotors is well positioned to achieve its 2021 forecast of over 500 purpose-built zero-emission commercial vehicles. Our results and the head start that our data production experience and customer validation provides us demonstrates the value of real purchase orders and real deliveries." Guys, the reason why I wanted to read you that there is because I wanted to show you the confidence that Tim Reeser has that they are going to hit their guidance of the 500 vehicles delivered in 2021. The fact that they've got no profit, no free cash flow, no EBITDA, low margins right now. They're not making money on the bottom line. I think that's okay. That's not detrimental as long as they can do that. If they can execute, on their guidance, if they can hit the 500 vehicles going from 72 in 2020 to 500 in 2021, they're going to do just fine. I was doing some math. Looking at the average sales price per vehicle that they've sold so far, adding up the revenue, dividing it out, I was getting about $148,000 per vehicle on an average sales price. So if they hit that 500 vehicles sold in 2021, I mean, they could potentially do like 73 million in revenue. Now, obviously, they did lower their guidance to 50 to 60 million instead of the 63 million that we saw in the investor presentation back in 2020. So obviously the average cost will come down, but I think that confidence right there shows that, we could potentially see a good chance of them actually beating that guidance, moving forward. I don't think he would have came out as strong and been like, we're going to do 500 vehicles if he wasn't really confident that they were going to do 500 vehicles. So a couple things here. Let's just take a look at the backlog and sales pipeline and then the outlook. So like I said, the company backlog as of March 31st was 169 million, increasing 500% year over year. The increase in backlog orders reflect continued robust demand for the company's vehicles. Again, guys, obviously, when you're starting at a low baseline, 500% looks amazing, but nonetheless, that is good. They are growing. That is good. The company's sales pipeline remains strong at 807 million and is expected to grow further in 2021 due to favorable news at the local, state, and federal level that suggests broad support for commercial fleet electrification as well as expanding sales force. Sales pipeline may not be indicative of future sales and can vary significantly from period to period. So guys, nonetheless, it is good to see that their 2021 revenue and 2022 revenue is already, pretty much, if they did nothing else but just focused on their sales pipeline, they could hit both years. And their backlog will take them at least through the rest of this year and into next year, keeping them on track for revenue guidance. The full year outlook for 2021. Based on current business conditions, business trends, and other factors for the full year 2021, they expect revenues to be in the range of 50 to 60 million, so 55 in the midpoint, and vehicle and powertrain sales of 500 units. Now, this talks about the, obviously the shortages, the semiconductor shortages, and the just increased pent-up demand. The significant impact on short-term margin and operating costs, resulting in small negative gross margin for the full year. However, margins are expected to progressively improve over the next 3 quarters from the negative 16% in Q1. As the company ramps productions and benefits from operating leverage, operating losses will also be impacted and are expected to be higher each quarter than the first quarter loss of $5.3 million, with public company cost as well as higher investments in research and development and sales, general and administrative costs to scale the business. So guys, perfect, right? So they did negative 16% on their bottom, towards their bottom end in Q1. If they can continue to cut that back and increase that over the next 3 quarters while also growing revenue and going beyond their sales metrics, I think the stock will do just fine, regardless of the negative net income and the negative free cash flow. So, all right, now let's jump in. I want to show you a couple of things, guys, give you my price target. As of right now, there is about 73.23 million outstanding shares. In the trailing 12 months, as you can see here, they did 13 million so far in the trailing 12 months. If we jump to the investor presentation that we looked at in 2020, we can take a look at some of the revenue guidance. So they're thinking they're going to do, in this presentation, 63 million. So they lowered that guidance to 50 to 60. So they did bring it down just a little bit, which I don't think is a big deal, but nonetheless, they did lower it. So let's just take let's use a price to sales ratio. So the current stock price is around $8.05. We're just going to use $8. So if we take 8 and we times it by the current shares outstanding, we are going to get the implied market cap, right, of about 585 million as of the trailing 12 months right now. If we take that and we divide that by the trailing 12 months revenue of the 13 million, that's going to give us essentially the price to sales ratio, which is about 45 as of right now. Now, if we times that by the midpoint of revenue guidance, so 50 to 60, so 55, that will again give us, our price to sales ratio for the end of 2021 if they do the 55 million. So if we divide that by the outstanding shares, that will give us our price target for the end of the year, $33.84. I think that's actually a little bit too high for the end of 2021. So what we'll do now is we'll actually use a forward price to sales. I think that makes a little bit more sense, but I just wanted to show you that for reference. So a forward, if we take the 55 million, that they're going to do at the end of the year, we do the same type of thing. We times the $8 per share by the total shares outstanding, and we take our market cap of the 585 million. We divide that by the 55 million that they're projected to do in revenue guidance. That gives us a price to sales ratio of 10.6. So if we use the 10.6 and we send it out to 2022 revenue, which again is the 354 million. So we times this 10.6 by 350 million. That will again give us the implied market cap by the end of 2022 based off of this price to sales ratio, that we're using. Now we divide that again by the outstanding shares, which will then give us the price target for the end of 2022, which would be $50.90. I actually don't think that's that bad. I actually think $50.90 is pretty reasonable by the end of 2022. If and only if they hit their guidance, they chop their bottom line, they get their margins up, they don't have any issues, they continue to expand, they hit their guidance on their pipeline and backlog. I think that's reasonable, and I think the stock could absolutely get there. There's obviously risks involved here. There's a lot of dilution potential with the warrants. There's dilution potential with, doing share earnouts, capital raises. There's a lot of different concerns out there. Also, the government subsidies, they can disappear in an instant. So we'll just have to wait and see. Realistically, guys, if I was to put a price target on this stock by the end of 2021, I would say more around the $19 to $23 mark, which I think is pretty reasonable if they can continue to do what they're doing, hit their guidance, you know, and keep their deliveries and their revenue growing. So let's take a look at the chart and we'll wrap it up. So as you can see here, guys, I mean, we've looked at this chart multiple times, but, you know, it didn't do too bad when it first came out and announced the merger, you know, ran all the way up to a high of $17.36 mid-January, and then just got shorted to oblivion all the way down to a low of $5.84. Did ended up closing on that day right around 6 and then gapped up to 622, and ever since then has kind of broken that overall downtrend in a shorter term trend, counter trend, to get back up above this support area where it has held into other areas. You are starting to see negative momentum flow out of the MACD oscillator. The RSI starting to move back up, starting to kind of cross through that midpoint. So you do have more gas in the tank. Overall, guys, like if you take this, you know, this trend line here and you were to pull it down through here, I mean, it's going to come back down here and retest this area. If it doesn't hold this area, you know, you're obviously going to fall back down. What I ultimately think, though, is if it can hold here, it's going to come back up here and retest this area up here around the $10 NAV pre-SPAC price point, which in my opinion is the most crucial price point, because ultimately it's got to recapture this previous high. If it can't capture this previous high and it gets rejected in these areas, it's gonna bleed back down to $6. I mean, that's just probably what's gonna happen. The price point of $7.93 obviously isn't a bad price. If you plan on holding it for the next 2, 3, 4, 5 years, if your mindset is more short term, I would wait to see if it can hold this level and then start advancing, or if it's going to break down back through these levels and come back down here and retest. Overall, you did get above the 20-day moving average, which was fantastic. You can see it has been a brick wall on this stock ever since January, but you did manage to get a candle close above it, and you haven't fallen back down below it since then on a daily chart. Your RSI is looking good. I think overall, you know, if you can get above this this 50-day moving average and get above this $10 range, you're going to be off to the races. That's when the party's going to start, and you're going to see it coming up here and retesting these higher levels. By the end of the year, guys, if they do everything they should do and hit their guidance and do their revenue, you know, hit their deliveries, I think this $17 price point is very, very obtainable. And I actually think you'll see, you know, even in higher price point up around the $19 to $23 range by the end of the year. That's obviously if everything goes right. They've got to do a lot of things right. And if they do a few things wrong, it could drastically hurt the stock price. But at the end of the day, I'm willing to take that bet. It's one of my favorite stocks. I think it's going to do very well. They own a large share of their addressable market within their niche. I mean, just in the United States, there's 500,000 vehicles that meet their criteria and about 1.5 million worldwide. I do think that the United States is more of the obtainable market for them in the next 10 years. But at the end of the day, they absolutely could expand, you know, worldwide in the future. I think they're going to be one of the dominating companies within their niche, and the stock price will reward our patience over the next 3 to 5 years. So that's it for today, guys. Thank you so much for watching. I am not a licensed stockbroker. Always do your own research and due diligence. This video is for entertainment purposes only. If you got a price target on the stock, I would love to hear it. Let me know down in the comments if you agree, you know, with the overall analysis, what you thought about the earnings. If there's any price, you know, targets that you've got for, you know, the next couple of years, send them down in the comments. I'd love to check them out. Also, if there's any tickers you want me to look at, let me know as well. I'll see if I can get to it. And then like the video if you get any value out of it. Come over and join us at the Patreon, be part of the family, and I'll see you guys in the next one. Peace.